Welcome to everyone who is on the channel. Thank you for joining in, and the discussion that we're going to have tonight is on a topic that's been causing a lot of conversation as of recently. So we wanted to make sure we had our experts here because there's a lot of information going around and there's some general uncertainty as to what it is as a reality versus what is fiction. So we're going to try to make sure we clarify everything. The topic tonight is the recent convergence that would have been discussed by our Prime Minister, where we have the local and the international rates now coming in alignment. So the rates that we would have had before, which would have been 25% initially and then went up to 30% from the recent budget for many companies, has now come down to a range between 5.5% and 1%.
Yeah.
Right. So we're going to understand what that means for Barbados, how it started, the history of it, which we would actually have discussed sometime early last year, I believe, when the then Minister Donovan Ennis would have been here in his capacity as the Minister of International Business, and Gregory McConnell was here as well to help us to start that discussion. We'll also go into some of the terms that you would have been hearing, the grandfathering and everything else that people are not quite sure, and what it means for companies and individuals, if it has any impact, what we should be expecting, and every other question that you guys will be posting on the thread. So we'll have Gregory to start off with an introduction as to give us some background as to what it is all about.
All right, thanks again for having me. Always welcome these opportunities to make things a little bit clearer for everyone. So in terms of background, back in probably April or so last year, as a part of a global look at the what were considered harmful tax practices or potentially harmful tax practices, the OECD started a review process of practically all jurisdictions. And it started with them asking us, the country Barbados, to provide answers to various questionnaires about our tax incentives and so on. The Ministry of International Business would have been the one that would have been taking the lead on that from the government's perspective, and they made the private sector aware of some of the questionnaires and the fact that this investigation was ongoing around August or so of 2017. So since then, the elements of the private sector have been working with the Ministry of International Business to, first of all, help with the responses to the EU. And once those responses were completed, then there was a lot of back and forward between the OECD, EU, and the ministry on whether or not our regimes would be considered to be potentially harmful. And if you had a regime that was considered to be potentially harmful, you had kind of two choices: agree you were going to change it, or go on a blacklist. If you agreed you were going to change it, you went on to what was called a grey list. Now, there was a whole bunch of confusion, but the long and short of it, like 8 of our regimes were considered potentially harmful. And I don't know all the details, there was some miscommunications, it is alleged, and we ended up, even though we made commitments, we ended up on a blacklist, that was in early December, and then after clarifications and maybe further commitments in January of this year, we were taken off of that blacklist and got onto the grey list, which had probably 50 other countries on it at that point in time, the grey list.
Just a quick question. What are the consequences of being on a black versus a grey list?
They hadn't come up with definite consequences, but there were things that they were talking about. If you're on a blacklist it would be very difficult to attract new business and so on, because the implication is businesses operating in those locations would have some sort of sanction.
So the foreign direct investments that we so desperately need would have been very difficult.
And the just pure international business and so on as well. So given the commitments that were made to amend the various regimes, and that included, there were like 8 pieces. It's the International Business Act, the International ISRLs, the Exempt Insurance Act, the Qualifying Insurance Act, the Shipping Act, the International Financial Services Act. They're, as I said, like 8 of them. Pretty much anything that offered incentives, there was a commitment made to make amendments to it so that it would comply with the OECD principles of what would be considered to be fair tax treatment and not harmful. So then, sometime around February this year, recognizing the magnitude of the issue and the magnitude of the effort that would be needed to come up with corrective measures, the Barbados International Business Association, formed the task force to provide assistance to the Ministry of International Business in turn, because the resources available within the ministry would be quite limited, and also in terms of having that business aspect to it come in. So there were, accountants, lawyers, tax professionals, and so on, from a broad range of the international business and other bodies within Barbados that formed this BIBA task force, with a view to assisting the Ministry of International Business to design alternatives that could meet the OECD requirements and satisfy them from the perspective of having a regime that would comply with fair tax practices. That task force was chaired by Ben Arundel, and as I said, it included a broad cross-section of professionals from within the industry, and it then worked closely with the Ministry of International Business. That task force was then mandated to provide a report on alternatives that would potentially satisfy the OECD requirements, and that they were given a deadline of July 31st for that report to be filed. It was provided, and there were 4 alternatives provided under that report. One was the first alternative, which was seen as probably the easier to implement and more quick to implement, would have been a modification of our foreign currency earnings credit, which is a mechanism where if you earn all of your business in foreign currency, your headline tax rate is still the 25% or 30%, but you get a 93% credit, so that it brought your effective tax rate down to 1.75, and 2.1% would be at the 30% rate. So that was option 1.
How long do you usually have to wait for credit? Is it like how we have to wait?
A credit isn't a refund, it's actually something you take off each same time, so you pay net.
Okay.
So that was option 1. Option 2 was convergence. Option 3 was the approach that Malta uses, which is a very complex arrangement where they pay tax at the normal rate, but when they pay a dividend offshore, they get a tax refund imputed into the dividend, so the government actually then refunds the shareholder. And the OECD were fine with that from a Malta perspective, even though it seemed a little odd. But it was a proven formula that the OECD were comfortable with, so that was option 3.
But before you move on, that Malta, as you said, seems very complex. Would we have had time to put a mechanism like that in place, considering the complexities of that?
I mean, any of them were. All of them require a significant amount of work, so it could have been done with the will and effort of everyone. And then the last one was a modification of the foreign currency earnings credit, where instead of a credit, it was some form of deduction. That was the fourth option. And
Hold on one second. So the 3 was full.
It looks fine to me.
Don't stop it. And just, are we still live?
It seems fine.
Are we still live? Okay, yeah, somebody said they saw it.
okay,
Sorry.
cool. Yeah, so when that report was presented in July, the end of July, the Prime Minister and Cabinet then would have looked at the various alternatives, and they decided that convergence was the one they wanted to choose. I know there's a lot of talk about it's being forced, but it was nothing that the OECD said you have to converge. It was one of 4 options, and that's the one that the government felt was the most appropriate option to take at this point in time. And one of the main reasons for that is every other option would still end up with a differential between domestic and international, so you would still have a preferential regime,
Right.
whereas with convergence, everybody is being treated at the same, so there's no preference.
So for the benefit of people who are not content oriented, so you have domestic at one level,
Mhm.
and you have the international business at one level. So effectively, once you have a differential between the two, it's still going to be deemed a preferential.
preference,
treatment.
yes.
So what that meant is that because you're preferring one sector over another, the OECD could always come back to you for this. So the goalposts can always be changed.
Yeah,
So from a conversion perspective, once you put it on the same playing field, then you have effectively given, we've effectively have the playing field for the next however long until they change their rules again.
well, yeah, there is no preference, so you can be attacked for having a preferential regime. There are other elements then that relate to jurisdictions that have a 0 or a low tax rate. And that's another project that the OECD is actually revived right now, and they're working on that. But that comes down then to if you're in a low or 0 tax jurisdiction, then they have what they deem to be or term substance requirements, and it's really for mobile type businesses. So businesses in leasing and financing and insurance and stuff like that, where you can easily do that from any location. They're looking at saying, well, if you're conducting that sort of activity in a low or no tax jurisdiction, then there's certain substance requirements that you need to be able to tie that operation to that jurisdiction, and then everything's fine. So that substance side of it is where we still need to address, and I understand that there's draft legislation which is now being pulled together to deal with that side of things.
Okay, well, at this stage, maybe what we can do is, so we realize where we're at and how we got here. So this may be a good time to actually just talk a little bit about what conversion means. And there seems to be a misconception that it was just domestic come down to international, but there's a little nugget of seed being lost that international went up.
Yeah,
So it wasn't that
definitely.
we came down. So the convergence means that they came together.
Yeah.
So maybe you can explain the conversions briefly.
Yeah.
And then explain what transpired in terms of the movement of the rates.
Right. So convergence means just that. Everything has converged to a single point. So 25% was the headline domestic tax rate, well, proposed to be 30, but for all intents and purposes, any tax they collected up to now would have been 25. And the international sector was at a sliding scale, starting at 2.5 for the first 10 million 2% for the next 10 million, 1.5% for the third 10 million, and then anything over 30 million was 0.25%. So what they did was forget all of that and have a single tax rate, well, a single band of tax rates now. 5.5% for the first million and 3% for the next 19 million. So that's on the international side, their 2.5 would have gone up to 5.5 and 3. And then the next 10 million is 3%. That would have been the 2% before. And then the third 10 million is 1%. And on the international side, that would have been, 1%. On the international side, that would have been 1.5 before. And the fourth level, sorry, did I get that right? I've got my numbers here. Sorry, the third band was is now 2.5%. That was 1.5 before.
Maybe we could start from the first 10 million. So what was it before and was it now?
First 10 million was 2.5.
Yes.
The first 10 million now is, the first million is 5.5,
Right.
and the next 9 million is 3.
So effectively they would have doubled.
They would have gone up close to double.
Close to double, right.
The second 10 million was 2, and that's now 3. The third 10 million was 1.5, and that's now 2.5. And then anything over 30 million was 0.25, and that's now 1%. So that's quadruple. Yeah.
Now, the reason why this is so important, we've had a lot of persons talking about the fact that we're going to lose a lot of taxes because the local side has now come down so much. But there was a statement made that the local side only contributed to about 10% of taxes earned. I'm not sure how correct that statistic is.
The total corporation tax was 10% of government revenue.
Right.
Okay? And then the Prime Minister in her speech in Parliament would have indicated that for every dollar of local corporation tax, so that's the domestic corporation tax, they would collect about $2 of international corporation tax. So she's saying it's like 66.33, right? So if you think about it, if you applied, or let me give you some examples of what that meant dollar-wise for an international business company. So an international business company that had $1 million in taxable profit would have paid $25,000 before. They're now paying $55,000. So theirs has more than doubled.
Yeah.
So that's 120% increase. A company making $10 million of profit, they would have paid $250,000 in tax. They now pay $325,000. So that's a 30% increase. A company making $20 million would have experienced a roughly 40% increase. So they would have paid $450,000 and now pay $625,000. A company at the 30 million threshold, they had about a 46% increase. So they would have been paying $600,000 and now pay $875,000. And then when you get into the big numbers, like a company making $100 million, and there are several international business companies that will be in these brackets. A company making $100 million would have paid $775,000 before. They'll now pay $1,575,000. So their tax has gone up over 100%. They're more than double.
And they're the bigger dollar value.
They're the big dollar value ones. And then a company making $200 million in profit, they would have paid $1,025,000 before. Now they're going to pay $2,775,000. So theirs would have gone up 150%. So there's more than double.
So if we get to this whole, because there was a lot of discussion, we certainly had one on, we were trying to explain that, because people had one in the newspaper in Barbados today, then there was another comment that this conversion is going to be funded through the consumer.
Yeah.
And
Consumption taxes.
it's going to be a consumer tax. So they were looking at the fall, they weren't looking at come up.
Mhm.
So the concept that both me and you is the same is that if we use the 66% model,
Yeah.
and you would say the metric is like
Let-
almost double.
Well, did two examples here numerically. Let's imagine a $100 tax. So 33 was coming from domestic
Right,
and 67 was coming from international.
right.
With the drop, the $33 that you were getting from domestic, assuming they have the same profitability and so on, you only get $7 from them. So you're giving up $26 from them.
So it's like 80%.
So yeah, so they're now going to contribute $7 to that economy. So the ranges that we had there, so the lowest was 30% increase, and the highest we were talking about 150% increase, more than double. So let's be conservative. And then there's the insurance side is slightly different in that the insurance continue to be about 2%. But roughly speaking, if you get a 50% increase in the tax revenue from the international business side, your $67 becomes $100. Plus you still got the $7 coming from the, so your 100 has become 107. So in theory,
That's without any new business.
that's without any new business.
And
And I mean, this is a very high level model. And I mean, the Prime Minister in her address to Parliament indicated that this was done to be roughly at least revenue neutral. So they did detailed modeling on individual data coming out of the DRA in order to model these rates to be neutral from a corporation tax point of view.
So the fear that persons have that this loss in revenue will be passed on to the consumer, that's unlikely to happen, or it should not happen because of
I
this.
think the question that Chris is asking, can me and Chris sleep tonight?
Have we not moving
Yeah, I mean,
the 25%?
I think there was a statement that the Prime Minister made. I actually have it here. In her address to Parliament, after she announced it, she announced revenue neutrality. She then said that she pointed out then, well, now we have a big disparity between corporate tax and personal tax. And she had hoped that they were going to address all of it in one go, but given the urgency of this, they were going to have to look at it in two phases. But she outlined the principle. So from convergence alone, no problem. From a loss of revenue point of view, it's designed to be revenue neutral, and the rates, even though the international rates are higher, are still very attractive from.
We should see these businesses picking up
Picking
and
up
running
on
away.
Exactly, and there would have been consultations with the larger players and so on to, gauge sentiment and reactions and so on. But the Prime Minister went on to talk about then doing a more comprehensive tax review. And they actually have a fiscal advisor coming in from one of the I guess another jurisdiction that has lots of expertise in this to help with a fiscal review. She mentioned that as well. But she said that the broad principles of tax that they want to follow in reviewing the personal side of things is that they want to lighten the taxes on work and productivity, which is the personal income taxes and the corporate tax. So they've done the corporate side, they intend to do the personal side. And if you look at the IMF BERT program, there are actually a commitment to have that fiscal review completed by June next year. And her comment then went on to say that the burden of taxation, the principles that they want to operate by is that the burden of taxation falls on consumption and on wealth. And she highlighted then VAT, petrol taxes, user fees, land tax, and so on. So there is a further fiscal review and reassessment of our tax environment, but the ultimate goal is a lowering on the personal corporation tax side, move towards consumption and wealth taxation, but she took pains to highlight protecting the most vulnerable in the society by use of the reverse tax credit.
That's what I was going to ask, because the concern we know some economists have is that the benefit of the personal income tax over consumption is that it focuses more on those who can afford.
Yes.
So those who can't afford to pay personal tax
Below the threshold, yeah.
don't even pay personal income tax, and those who have higher wealth, they would pay more. But with that, for example, if you made $1 million and they made $100, we both have to pay the same amount of VAT.
Yeah. Yeah.
So there's that inequity. So
Yeah.
if there's going to be a focus on reverse tax credit and how tiny that would be, then that would help alleviate some of the issues some persons have.
Yeah. And remember, under the BERT program, the commitment is to the IMF is that they cannot build up arrears. So from that perspective, they have to pay. Yeah. Yeah.
So let's just drift back here to the conversions, because we're going to look at some pros and cons here. So immediately, what I can see is that all the businesses, the Barbadian businesses that set up in St. Lucia and VA may probably be coming back home, because the cost of having that entity will be negated now by the benefit of what you can have it here instead of there. So I can see where that format is that you may get foreign direct investment from yourself, because that was now all those companies that set up in St. Lucia, and there's one particular guy down there that does a rural trade with setting up with St. Lucia companies. He must be a bit worried, because I'm thinking that some of those would be coming back home. Would you agree, or?
I don't know that they would necessarily opt to come back home per se, but it does lessen the incentive for anyone else to go up. Like if you're out there, if you're there already, maybe you're, But from the other point of view would be, when you think about like Barbados now is like a regional headquarters for pan-Caribbean businesses and so on, our rate would be pretty attractive compared to, for a big local operation compared to other places that those may be headquartered at the moment.
And then certainly, while if you compartmentalize the taxes, that 10% that relates to corporate tax, you kind of have that as revenue neutral with all the changes. But then when you look at your personal tax now, then that's where we have to start to talk about the consumption side, because now what you'll start to see is people who would then be moving towards becoming contractors instead of employers. So they can go through and set up SRLs or some of these type of arrangements where they flow through the system, and then, or some of the other mechanisms that's out there where you can set up, you would know, instead of paying the personal tax, you know, at the lower rate, the 5% or whatever it is. So has there been any assessment of what that transition may be?
I suspect anything like that would be very short-lived, given the statement from or the stated intention to review the whole personal tax system. So I don't know that it would make a lot of sense for people to necessarily run ahead and do that, knowing that it would be you have a different administrative burden and so on of being a corporate, but it's certainly a possibility that people would look to do things like that. But as I said, any benefit there would likely be short-lived, given the stated intention to review the overall level of the personal taxes.
So in reality, the whole purpose of the conversions was to protect the 67%, and not to, as someone said, give the 33% we fund for their political donations?
Correct. Yes.
That
The 67 and the 67%, we look in there purely at the corporation tax. You got to remember that in that 67% as well, they're
90% Bajans employed.
Bajans employed with personal income tax. When you look at it, personal income tax is roughly close to $500 million, right, of personal income tax. If we're very, very broad and say there's 130,000 people in the labor force and everyone pays the same tax rate, and you then do the prorating out, that'd be about $15 million in personal tax that would go if the corporate side of it went as well, right? Because those businesses would no longer be employing people, and then those people get salaries that then go to the supermarket, and even if they're spending half of their salary on taxable items like VAT and so on like that, again, there's a big knock-on effect. So it's more, you're going to look at more than the pure corporate tax element. There's a personal tax element, a VAT element, other elements that...
Because you would have lost.
Yes.
You would have lost some of the consumption tax as well if those were... And my understanding is that it was either or. We either saved it, or the chances are then the consumption tax that we were concerned about, we would now have to fund that 6-7%, because how close were we to losing this industry?
People were very, very concerned, and people were putting contingencies in place to be able to extricate themselves from Barbados to the extent that the solution arrived at was not one that they would work for them.
And would you say that right now that's kind of softened?
Very much. My understanding is people are, from the feedback that we've had so far, people are quite encouraged by the solution that has been arrived at. They find it a good solution. The other things that are being addressed from an ease of doing business point of view and so on are, there's definitely a positive feel. And when you think about it, a lot of businesses that are here from a international point of view and are tax paying, they really don't have the option of operating in a zero tax jurisdiction. And given the additional scrutiny now on the zero tax jurisdictions,
it's safer to just the devil you know.
Yeah, well, the devil you know, and the goalpost may shift even more for the zero taxes.
And you may be constantly, you move to another playing field, and your playing field is shifting again. Whereas here now, we can guarantee stability. So, is there any chance for us now to those zero tax that are now unstable? Is there any chance of us getting some of those?
That's where we now need to do a market the sector, because when you look at it in like Cayman and Bermuda and so on, for example, with substance requirements coming in from the OECD, and those jurisdictions having to legislate substance. Now, substance means you got to have adequate level of activity in the jurisdiction, represented by either people employed, premises you use, things like that. There are various measures that they use, but like BVI with how many 500,000 companies. The BVI doesn't have the geographical land space
to hold 500,000
to hold 500,000 companies that require substance, right? So there are opportunities from that point of view. In terms of substance as well, Barbados is people may laugh at this, but Barbados is relatively low cost compared to Cayman and Bermuda.
Yeah.
Like, I mean, for our own business, my own business that I operate within, we have operations in Bermuda and so on as well. And what we do in Barbados would cost us 2.5 to 3 times to do the same thing in Bermuda. and the cost of living in Bermuda and Cayman is very, very significant.
Sorry, go ahead.
There's two questions I wanted to ask. You have mentioned the ease of doing business. Is that this contributed to the increase that we saw in terms of, us coming down in the ease of doing business ratings?
Did we move in the ease of doing business? Moved what, the wrong direction
In the
again?
right direction. It not very much, but it's still.
There hasn't really been a focus on that element as yet. Actually, one of the recommendations coming out of the BIBA task force is that we now have a task force on ease of doing business within the purview of the social partnership.
Okay.
So that's one of the recommendations that hopefully will go forward. But even without that, you know, the government has outlined, you know, their plans for e-government and so on, and the wheels are starting to roll. I was just at a corporate trust service providers consultation at Lloyd Erskine before here, and the Ministry of International Business outlined some of the plans that they have in terms of online interfaces for applications and things like that, and you know, really looking to streamline. They don't want to announce too much stuff yet, but they want to be able to provide, you know, like when you go for a passport, when you submit, you get your date that that's what they want to be able to do. When you submit your application for incorporation or for a foreign currency permit or whatever, you know, right, 3 days, 4 days, whatever. They haven't set outline parameters, but I think that's important, you know, in terms of ease of doing business. If you have certainty, you don't have to be the fastest. It would be nice to be quick, but if you can deliver what you say, when you say, that creates certainty, and that makes it easier to do business. And that's certainly where they've started to get things going. Some of the other things they're talking about is, before the process was you apply to, you file your documents with corporate affairs, and then you have to submit another application over here. One stop. Everything goes into corporate affairs and Ministry of International Business work together, and BRA as well, and you eliminate that, some of the lag, because, you know, sometimes the lag was you had to then wait till you got your incorporation documents to then go and apply for your international business license. Not that you have international business licenses to apply for, but you have your foreign currency permit to apply for or renew. Yeah.
Just a couple of things. So if we talk about leveling the playing field, you have companies that are earning US dollars, and in some instances, some people may be paid in US dollars. We have a law in the books where it's illegal to hold US dollars. You can't trade US dollars. They can't go into a store with US dollars and buy. That's illegal. Is there a move toward decriminalizing the US dollar, as well as allowing domestic companies? So since we're now being a one, is there going to be a move that domestic companies now can hold US dollars?
Well, remember the foreign currency.
The decriminalization first.
There is a recommendation, and I think Avinash Prasad would have mentioned this in some of his statements, to move to a liberalization of exchange controls. And that's certainly a recommendation that has also been echoed by the BIBA task force. But as a first step, the foreign currency permit is available to anyone earning 100% of their revenue in foreign currency. So any business that has some foreign currency element could bifurcate their businesses, earn their domestic in one entity, earn their foreign currency in another entity, get that foreign currency permit, and, you know, have free access to exemption from exchange controls. Where they'll land up on in terms of the liberalization, we just gotta wait and see, but it's certainly something that is being actively considered.
Do you not see that as a way of getting our ease of doing business to be better?
Oh, definitely, definitely.
And attract foreign investment because if they don't want to make sure that their US dollars
Get trapped and
Yeah.
No, definitely, that would definitely be one of the factors. I think when you look at the ease of doing business report, it actually gives very detailed information on every aspect that contributes to your poor showing, and you can actually then pick out the areas that are having the big impact and focus. And I think that's what the idea would be for the task force. Let's take the report, let's identify the low-hanging fruit, like town planning. I think the approval, it takes I think there's something like 400 days or something like that to get a permit, according to what the doing business guide says. So if you can focus in on that and drop 400 days to 60 days, you can imagine the strides you would make in doing business.
Because we tend to blame the civil servants for that type of work, but in a lot of the instances, when I go into a business, I have this audit framework, and I look at the process, and in a lot of it is entirely the process, not the people.
Definitely.
In 95% of the cases, the front end people are maligned.
They're the ones you're seeing.
And it's not their fault. It's truly no fault of theirs. But we have a process, and I remember several years ago, going to an ICAP conference, and there was a Miss Marshall there, and I think it was her that gave the example. Apparently, we used to have a form that when you come into the airport, you had to fill out a form, and if you lost your luggage, you had to fill out a form, and the form referred to the vessel you were already on. And it got changed, from my understanding, was that when the former Prime Minister, Erskine Sanford, came in, he was on a flight, his bag got lost, he was the Prime Minister coming in the island. And when he filled out his form, he said, well, this is ridiculous. So I think there's a lot of forms and processes in here, and I think the government will have a challenge on their hands in terms of trying how to streamline most of these processes. And I believe a lot of it can be done basically by taking processes and jumping around that has to be done unnecessarily. I think so that for an ease of business, I think a lot of it can be done just by addressing the process. I know in the past there's been a recommendation, I'll use his name again, Adrian McLean, and he says it, and I keep using it, but I think he's racing. He has suggested having a change manager within each organization to try to guide the change and evaluate the processes. And I think that's a great idea. And I think in line with what we're doing here, we started now with the international business sector, and in terms of now the next step is the ease of doing business. I think we just need to keep going and solidify Barbados, because from my concern, my only concern to the whole thing is if you're in Vegas, we're all in on international business in terms of our sector. So we're protecting the international business, and it is a business that has been stable for a period of time, and we need to just make sure it continues that way. But at the end of the day, if the international business, for whatever starts to go downwards again, then we could end up with more problems here, because we've gone down in terms of domestic. We can't go back up. So it's be very difficult to go back up. So I think from here we need to push forward in terms of the ease of doing business, make Barbados a brand, and all the other initiatives that was mentioned about e-government, etc. There seems to be a lot of initiatives in that area. I think we need to push those to keep Barbados as a brand that we're open for business and we want to do business.
Definitely, that's the whole idea. And I know Invest Barbados are being looking at again the whole approach. I know the Prime Minister would have had a strategy session with the folks at Invest Barbados in terms of outlining the vision, and it's exactly what you said. Barbados is open for business. We're a global business destination. We need to provide the infrastructure underneath now to be able to live up to that and develop that brand into something that really means something.
Well, you've done such a great job. We actually don't have, I was thinking, Sandy, we have no questions.
Well, I have one last question because I know this is one that someone had asked me before. They wanted to understand what the grandfathering was
Oh,
and
yes.
what impact that would have.
Right, so grandfathering is the way they intend for this transition to work is that anyone that's an IBC, for example, would automatically convert to a foreign currency permit entity unless they write to the ministry. All they have to do is write to the ministry and say, we're electing to be grandfathered. What grandfathering does is it says you can, notwithstanding that we've abolished the IBC Act or whatever piece of legislation we're referring to or operating under, you may continue to have those benefits up until June 2021. And during that time, you would continue to have, although in the Prime Minister's statement, she did amend the lowest tax rate for international businesses under the old regime from the 0.25 up to 1%. So they will continue to have the old tax structure and the old benefits, and will continue to renew their IBC licenses and so on. But they can only do that until 2021, June 2021.
So all of this will not kick in, the tax will not kick in until 2022?
For those that may want to elect to grandfather.
So
But
why
they-
should they? No, but if it's 2021, then tax will be payable in 2022.
Well, true.
Mhm.
Yeah.
Yeah.
So why would someone not do it?
There may be a perception things about it, from their home jurisdiction or so on, that you're, continuing to operate under obsolete regime. You have to remember too, the differential in tax by moving that 0.25 rate up to 1%, even for them, the differences on the lower bands are probably not that significant, but no doubt there will be some people that would take advantage of it, but there will be still, as I said, that 1/4% moving up to 1%. That's quadrupling the tax payable in that band, and that's kind of significant number. You also, I don't know if you've noticed the central bank report for the period to September, but our corporation tax collections for April to September 2017 were 110 million. April to September 2018 was 160 million. That $50 million, that's international business
So is that
taxes.
Because last time you were here, we were discussing a scheme that was salvaged. Last time we minister here, it started in December 2016.
Yes,
Right. And is that the same
That's
as the
right.
hybrids?
yes.
So those are now coming off stream. So they would have been effectively operating in 2017. So now we're seeing 2018.
They're seeing the
taxes.
tax come through in
That's why 50
2018.
million. Is there?
And that number will be bigger because all of them didn't pay that tax necessarily in 2018 or didn't pay for a full period in 2018. And then, remember, a lot of them are the big ones where they were at the 0.25% for a lot of their income. So
Why they would not pay tax?
depending on when their financial year end
Okay, so
was
that's
and
still
so
coming.
on. So they would have maybe had a partial year or something like that. So the expectation is that they will make an even bigger contribution in 2019, and now with the 0.25% rate for them going to 1%, it could be quite significant.
So it could be our version of finding oil onshore.
Yeah, nice little
Because if it's 50 and I'm going to say we double, that's 100.
yeah.
And most of it hasn't even.
Because remember, those big when I showed you those calculations, those big corporations at the new rate will be paying 2.5 times what they paid before. So yeah, they aren't in the lower band is only a small fraction of what they will be paying. So that move from 0.25 to 1 will capture, you know, I would see them at least doubling their tax contributions. 50, that's 50 million Barbados.
Oh, 50 million Barbados.
That they paid. So it
Could be 100
should easily be 100
million Barbados.
Mm-hmm. Mm-hmm.
So those targets that we had in the program, looking at if we may be able to meet them.
Pretty sure we will. Yeah, I think they're you know comfortably on track based on, you know, that 50 million definitely helped. You know, that wasn't necessarily factored in because it would have not been seen before. You know, new taxpayers and so on. So, you know, I think that's.
So my last question, because we heard from the head of the Barbados Credit Side Association, who made comments that this move will help to see the economy to grow and help with productivity and business. We had a minister who did employing persons, companies to pass on benefits so that you can help stir the growth and start getting things moving again. If there's so many benefits to this new system, and this is something that was in plans from before, when was it their push for it before?
In the plans.
Because the last, not the last administration, well, most of us would know the way the last administration we were not pushed, but in last budget, this wouldn't have been included. It actually had the opposite.
Well, a lot of the challenge was data.
Okay.
You know, this needed significant work and access to data in order to be able to model this correctly. You didn't want to go and make
sure you have
a bold change like this without being pretty comfortable with that you were modeling it in a way that you were confident that the result would turn out as you modeled. And that was a big problem, just the access to data and being able to spend the time in the data to develop models for a rate structure that made sense.
And what would have been the biggest contribution to not having accurate data before? And this is a short period of time because we only had a new administration for 6 months now. How were they able to turn that around so quickly? I don't know all the details. I know there were concerns from the holders of the data that they couldn't necessarily share it with the people that needed it from restrictions on confidentiality and so on. So, I mean, Minister Innes in the previous administration would have talked about this as well, where he was unable to get access to data because one body felt that they were constrained in sharing data even with another government agency.
We have one question here. Andrew asked, does the panel, Andrew, this is something we addressed earlier, but we'll just repeat it for the sake. Does the panel foresee individuals forming more companies to avoid any tax? But we addressed that because we talked about having other, instead of being an employee, you become a contractor. And then
Right.
so in other words, instead of paying the payroll tax, you'll be paying the company tax. But you indicated that is really short term because we're looking to, there's a move towards that in June, so maybe you just want to repeat.
Right, yeah. The Prime Minister in her ministerial statement in Parliament talked about her original hope to address personal and corporate all in one go. And because of the urgency to deal with the OECD issue and be in compliance, they had to go ahead and deal with the corporate side. But within there is a stated intention to review the personal side and move from to lighten the taxes on as she said, work and productivity, which is the personal tax and the corporate tax. So they've done the corporate side, they're now going to do the personal side, and they made a commitment within the BERT program to complete that comprehensive tax reform review by June of next year.
Okay.
So any people may make a move, but it would likely be short-lived.
So by June.
Yeah, roughly.
So keep all of these dates in mind, people, so that
We'll
when
be
they
back.
come around,
We'll be
they
back.
can see if they actually happened, and if they haven't, you can get to get an understanding of what would have caused any delays.
And if you look on the IMF website, they actually have the MOU that the Barbados would have committed to under the BERT program, and that has a table which outlines all they have the hard targets. I think it's like page 52 has the numerical targets, and then like page 60 to 62 or something like that has a whole list of actions actions with dates that need to be taken. So there's that external oversight and discipline to make sure that, or someone actually holding you accountable for what you've committed to do.
But in essence, although in concept we're here, but we're not quite there yet.
No, there's work to do. Lot of work to do.
It will
Because-
not all happen overnight.
Because one of the misconceptions, and I know from personal side, the amount of effort that was put in by the private sector in terms to make this work. Because in a lot of instances, a lot of people, and I'm sure you did as well, set aside their actual businesses because effectively what they were doing was saving Barbados, saving an industry.
Yeah.
And there was a tremendous amount of effort that was put into this endeavor. So I think a lot of time I saw some callous remarks in the social media, as you can expect, and people are not aware. But I know from first-hand experience the amount of effort and time that was put in to making this work.
Oh yeah, I mean the number of people involved and the consultation that the BIBA task force would have conducted was not just with its own group. They would have gone out then to various other industry players and so on and got input. And the amount of time that people spent, voluntary time, weekends, late nights, sometimes large portions of the business day spent voluntarily in meetings and so on, and consultations and coming up with the things that needed to happen. Because the tax side of it is only one side. We actually had 8 working groups dealing with different aspects of the legislative and process changes and so on that all need to happen as well. So it's a massive effort for sure.
I will give you a suggestion. You want to be good at this item, international?
Mm-hmm.
I would suggest you all take that international level. So the reason is there's a misconception. As soon as you say international business, it connotes tax havens, etc. I get Americans telling me that and saying, no, you're a tax haven, you're not. Because you have, I list off South Dakota, the Las Vegas, the Delaware, Puerto Rico, and the list goes on. But one of the misconceptions here locally is that this is an international business. And it really is not, because 90%, the industry employs 90% Bajans.
Mm-hmm.
So it is as Bajan as you can get. And one of the things I would say that you need to look at, especially now you have the convergence and there's really more differential, you might want to consider in brand going forward, removing the international.
Definitely, that's on the cards. The name is being,
Addressed.
the name among other things are being discussed, and definitely being looked at. I know, agreed. It needs
So I
to.
can't even get commission for that.
Too late.
It's you did.
There was actually a press conference today. It was more like a media briefing. So we had Kevin Hunt from the Ministry of International Business. We had Ben Arundel, the head of the BIBA task force, the acting CEO of the FSC, along with the BIBA president, they did an information session this morning, about 2 hours for the press on all of this type of information as well. And it's expected, I don't know, all the media houses were there, so I expect we'll see some stuff in the press on it tomorrow. But GIS are actually, well, they videotaped it, so GIS are actually going to be issuing a video on it. Yeah, so that'll also help to get across to a wider cross section of the public. And the whole intention of that was to educate the journalists so that they can tell the story as it is, as opposed to taking
yeah, and then just fueling the misinformation and everything, which just muddies the water and just changes unnecessary scenarios.
And it was a very interactive session. The journalists had lots of very good questions and so on. And overall, I think not sure the time as I said, but JS are going to have something, some elements of it at least on their social media.
Until then, you see it on Crystal's website.
Yes.
Gregory, I am very appreciative that you would have come and given up your time. Again, this is time being voluntary. He's not paid to be on here. This is free. So we appreciate you giving up your time to be able to give us this education and to help clarify a lot of questions that I didn't even know that I had, because some of the things that you mentioned, it really hit home to me, was really going to be happening, and some of the fears that persons have, that we can more confidently let persons know that this isn't going to be the case, or that they can ease their minds as to what it is that we have to look forward to. So I thank you again, and I hope you enjoy your Independence and Christmas socials, and everyone have a good night. Anything else that you'd like to add?
Thank you again, Gregory, and I'm glad I was called Gregory on Sunday night, and he was here today.
Very last minute.
So thank you again, Gregory, for coming to help spread the information and educate us on what the facts are.
No problem at all, and I, just welcome the opportunity to be able to, share the background and help allay any fears that are out there. So I welcome the opportunity to come, and anytime I'm always available.
Right. Well, thank you.
And thanks to everyone out there for your comments, for the sharings, for the likes, and for the support. I hope you have a wonderful Independence to all nations.